Hello guys, welcome back to our YouTube channel.
In this video, we're going to run through some analysis for next week. Brian's going to talk about GBPCAD, and then I'm going to talk about EURUSD.
But before we get into that, make sure you like, comment and subscribe and turn on post notifications so don't miss any content.
So let's get straight into it. Right guys, so this is EURUSD analysis going into next week. So we'll do some top-down analysis, starting on the monthly time frame. I've got a nice psychological level through the market at 1.22, where you can see price has been using it as resistance, followed by some consolidations at this level as well, which goes to show the slowdown and the decision-making that's going on at these key levels in the market. Being used as support quite nicely here, you can see twice, and then over here being used as resistance. And then most recently, we have used it as resistance again. And you can see the bearish momentum is stepping in. Jumping down to the weekly time frame, we can see at this level, we have seen a slowdown in momentum by these doji candlesticks. So indecision in the market, and then we can see that sellers have stepped in and we're starting to see some bearish momentum and movement to the downside. You can see price was obviously uptrending, so we were having these big impulsive moves, followed by these slowdowns, followed by these big impulsive moves. But you can see that the difference between this impulsive move and this impulsive move, it just goes to show that the momentum from buyers have slowed down, because this is a much bigger push from buyers, followed by the slowdown, and this is a much smaller push. So it just goes to show that because we've now reached this psychological level, sellers are now stepping into play and buyers are unable to drive price higher. So looking at the candlestick on this weekly time frame, you can see that we have closed as a strong bearish engulfing candle, completely engulfing this area in the market, which was a previous low, which we'll jump down to the daily time frame to look at. So it just goes to show how much sellers are stepping into the market because of this momentum from these candlesticks. So yeah, we can say that the structure has shifted. If we jump down to the daily time frame, this is where we can draw in some nice key levels which are having to play. So what we had, well, we did have this double bottom here, and then we had this level of resistance through here, which is being used, and then we had a break to the upside. And then ever since then, we were looking for a pullback into this level to take long positions. However, you can see that buyers have failed to do so, and the price has just continued to the downside. Now, this key level in the market, this zone, does line up with a psychological level of 1.2. So it's very significant, and this is where we could be seeing price being used as a pivot point next week for potential sell positions. What else can we see in this market? Well, we can also see some false breakouts. So if I was looking at this right now, we can see that this right here is a false breakout to the downside, where price has just come down, and then we've seen buyers step into the market. And so all that goes to show is that this level here isn't being used as support, but the actual level, as you can see by this wick right here, is that the actual significant level that's being used is 1.2. So this is the level that we're going to be looking at going into next week. So if I was to jump down onto the 4-hour time frame right now, what can we see going on? So ever since we used this zone as support, we have been uptrending. Now, the key thing to look at is something like this, where price was using this level through the market as resistance. So we've got resistance here and we've got resistance here. Now, a lot of people are going to be selling the market here because they think price is going to come down. However, we had this big push to the upside. So I've highlighted this candle because we had a big push to the upside, where a lot of people would then think that the market is now bullish and people are going to be buying off of this candle. But all price was doing was coming up to this level 1.222, where price had previously used it over here. This is why you need to be careful in the market and look at all these levels, because this isn't the key level where sellers are stepping in. Clearly, price needed to come up here to tap this level where previous sellers have stepped in, and now we've seen the big push to the downside. And if I was to jump back up to the daily, you can see how this candle right here ended with a massive wick to the upside. So that's just one big rejection candle. Okay, that's just one big false breakout to the upside. So clearly, buyers aren't involved in this market. And then as you can see, ever since then, sellers have been stepping in, and we've just been making bearish market structure. So if I was to look at a 4-hour time frame, you can see that now we are in this bearish market structure where we've broken to the downside. used 1.2 as a support level. So this is kind of an opportunity now for buyers to step in again and drive price higher. However, you can see that they failed to do so, and instead we made a lower high in the market where price was just using previous support as resistance. So clearly sellers are more involved in the market, because if buyers are unable to step in here at this psychological level and drive price higher, it just goes to show that the strength of the sellers right now in this market is a lot more than what buyers can like take control of. So now we've clearly broken through the downside, and as we saw on the daily, the weekly, this closed as a strong bearish engulfing candle. So we can expect some kind of correction back up to 1.2 to then see the continuation to the downside. Now, the reason we're expecting 1.2 is because if I look back up to the daily, we can see that price is using this level of significance. Now, what we might see is price pull back up to this level throughout the market. Let's have a look, something like this. Might pull up to here. However, I think that will just entice early sellers to enter the market, and this won't be where price needs to pull back to. I believe we're going to pull back a lot further, and one way we can kind of predict that is by using our Fibonacci level. So we've got this bearish market structure. If we use our Fibonacci level from swing high to swing low, we can see that this level up here of 1.2 psychological level does line up with the 50% fib. So this level here doesn't line up with any kind of key fib level. So we know that the probability of price pulling back to this level and then continuing to the downside is low. So we're going to wait for a proper correction back up into this zone, back up into these fib levels, to then look for sell positions back down and continue with the trend, continue with this bearish market structure. So that's it. Going into next week, we're going to be allowing a pullback into these levels, a much deeper pullback, to then look for sell positions. So yeah, that is Euro USD broken down into next week.
Right, guys, I'm going to be explaining Great British Pound CAD. So we're on the monthly chart, and we're just going to identify key levels, psychological levels, and then trend lines in the market where we can potentially see reversals. So you can see a clear psychological level here at 1.59, where previously in history it's been using as support. We also have our psychological level here at 1.78, which obviously used as resistance, where we had multiple false breakouts, as you can see here. And we also got this trend line here. If I just connect the wicks, you can see we've got 1, 2, and 3 touches here. So once again, third touch of a trend line, we might potentially see a lot greater reversal from this area in the market. When we jump down on smaller time frames, it'll come a lot more sense. Jump on the weekly chart. What can we see? Right, so we can come here towards this level in the market of the now in the market, and we can see that we had this evening star formed here, where we had this doji wicking up, touching that trend line, tapping into the 1.78 psychological level. And then what do we see? Last week, we saw this bearish engulfing candle breaking 2 previous weekly candles. So therefore, that bearish momentum has started to kick in, and we might potentially see a pullback back into some sort of level to then see that continuation to the downside. Jumping on the daily chart, what can we see? So on the daily chart, we can clearly see this level here. Oh, sorry, this trend line here with 1, 2, 3 touches here. And then what can we see? We see this bullish candle, with a wick to the downside, looking that we're going to continue up. And then what we see? A bearish fall down. So this is just enticing buyers to step in the market one more time. They would have got stop loss hit, because as you can see, the bearish momentum kicked in. And now you can see prices now reversing. Key levels in the market, we can see this level here at 1.7435. You can see here a nice level across here that uses resistance. We've got nice wickies into this resistance, and then boom, we break to the upside. We then come back, use that support, as you can see here, and then we continue up to the upside. So yep, you can see that's happened. We can also see this level across here, which is also a psychological level, which is 1.76. So you can see this level across here, 1.76, we use it as resistance, support, and now we have broken down from it. Boom, so that's that. We can also see a potential head and shoulders pattern forming, where we have our left shoulder here, our head, and now we might potentially see our right shoulder form. And we might potentially see this level here be used as support as the right shoulder, as the neckline. So going into next week, we might even potentially be able to look for pullback back into this region and then back down to the neckline. We have to jump on the smaller time frames. So I can show you how to do that. So jumping on the 4 hour now, this is what we can see. So we can see how price has impulsed away from this area, where we have this psychological level here at 1.76 as well. So if I draw in my Fibonacci from swing high to swing low, you can start to see that these fib levels are coming together, and you can see where they can line up with these key levels. So as you can see in this situation, we got 61.8%, which is the golden zone in the Fibonacci, which is one that everyone aims for, is lining up perfectly with that psychological level of 1.76. So what we can see, or what we can predict, is a greater pullback back into these levels. Now, as you can see here as well, we also got these two levels here, but these levels look like they were false breakouts, enticing sellers to step into the market early. You can see here with this bearish engulfing candle, we actually had a form even star here. We can see straight after that, the bull stepped in and they push price up further again. So looking at this, you can clearly see that the true level here is the 61.8% Fibonacci retracement, which is also the 1.76 psychological level. So greater pullback back into this area will be needed in order to look for the sell on this pair. So once that happens, that would be perfect. We can then look for a sell in this region. Our target can definitely be this level down here, which also lines up perfectly with the 1.27%, which is the Fibonacci extension. And that also lines up that nice level here at 1.7435, which, as I've spoken about, lines up perfectly with area of significance in the market. So that'll be the first potential position we can find on this pair, is trading that right shoulder back down to the neckline. That'd be a nice day trade. So now what we can now, after this, we can then predict that if price breaks the neckline, we can then look for a pullback back into the neckline. From that pullback to the neckline, it'd be the same process again. We can look for a selling position back here and trade it back down to our next psychological level, which is 1.72. And what this would do is just create this bearish market structure, and we'll just be following the trend as it refers from breaking this bullish market structure, with this bullish trend being broken. So yeah, this is what we're kind of looking at for Great British Pound CAD going into next week. We can clearly see that the bears are stepping into the market and the bulls are just not here anymore. It's not present, especially rejecting the psychological level at 1.78 and also that high time frame trend line. So yeah, this is Great British Pound into next week. Thanks guys for watching the video. We really appreciate all the support.
Make sure you follow us on all our social media platforms, and to get involved with us, all the links are in the description below.
So see you next time.